Alright then, so this is take 3 of trying to do this video because we've had some technical difficulties. We're going to go over today's trades, or today's trade, I should say. Took a long on the NASDAQ and closed it a little bit early. And we secured 72 pips and £107, 5p profit there. As you can see, 14 minutes trade. Gonna get into my thoughts behind it, what we were looking at, and yeah, so to start with, initial ideas on this trade were, well, points to note were we tapped this higher time frame point of interest, which is a 4-hour fair value gap, and price had then, let me just put this in, do not disturb, price had then had a reaction off it, traded back through it, another reaction up, no inverse fair value gap or anything, final sweep, there you go, and then we got the inverse fair value gap and the big reaction out of this zone to signal a change in bias. So in terms of what I was looking at initially, so the trade was on the NASDAQ, but I was looking at the S&P to start with. I was looking for a break and retest model, and it just didn't form on time. We had Trump speaking at 8:30 New York time. And yeah, I just wanted to give it a bit more time to air out today, In terms of the actual news itself, although it wasn't great news, it wasn't news being like, we're going to go and actively take this land. Do you know what I mean? It was more just like, not going to use force, looking to seek negotiations. So that is bullish, especially after this, or the speculation of the negative price action, or bearish price action even. And yeah, so what I was looking at was, we got this initial reaction coming into the AM session. Don't know why it's not showing on the, oh, it is showing on the chart, sorry. Yeah, so we started the AM session here. Now, due to the amount that price had run up, I was initially expecting maybe like a rejection from this high here instead of a break and retest. And, that would have been like a 3-to-1 short trade that I would have been looking for, which I'm glad I didn't take. It would have been like 10 point or whatever, 3-to-1 to go short and then come back down into here or a bit further down into this inverse fair value gap. And then in terms of what else I was looking at, we got this, is it 30 minute? No, so we got this 15-minute inverse fair value gap. We broke structure with a big bullish candle, and at the end of that break of structure, we also created a fair value gap. So as you know, if you've been watching my videos, that is previous daily low to previous daily high model. And we also got the exact same thing on the NASDAQ as well. So it looked a bit cleaner on the NASDAQ. I liked the price action a bit more. I think it was the fair value gap that I liked a bit more, the way it was holding. And yeah, I just wanted to wait a little bit, see what the reaction was. Or what time did I actually get in? Because I closed it at 9:51. My opening time was 9:39. So if we go into the 1 minute, where did I actually get in? 9:39. So I got in on this candle here. It was around here. I pressed buy, and due to spreads, put me in just a little bit higher. When I would have got a better entry if I'd gone in around here in the fair value gap. But when this model plays out and we have the higher time frame context to support it, I have enough data to trust it. As I'm saying that, I realize I closed early, but you can see here we got full TP to take previous daily high at 10:51, 10:31 even. And yeah, so similar sort of thing going on here. My reason for closing early was because I marked out this first high. We had an imbalance here, and there was this high as well. However, we had this, what actually was it? It was a point of interest, but I can't remember what it was. I think it might have been an hourly gap. Yeah, this little hourly gap here, which you can see prices just continued up out of on the S&P, traded up, retraced back into that, and pushed up further. But yeah, so that was why I wanted to close, plus my loss earlier in the week. Ultimately, if I had held this all the way, 2%. Hold up. What? Oh, I'm on the wrong. Let me just swap this out. Oh, actually, you know what? I'll leave it as is. It was a £130 stop, and it was a like £330 TP. So yeah, I closed out at 107 here. This would have been 160, and up here would have been about 200, 300 around here, 330 here. So yeah, it was nice to see this model play out because I've not seen it for a while. I've been doing the 8 a.m. break and retest for a while. So it's a nice little pleasant change. And also to coincide with that bullish bias, we had this big high time frame point of interest, the big weekly opening gap, which, if you look closely here as well, we've also created a nice big inverse fair value gap, broken structure, and probably see fair value gap within here, maybe here. So if price comes back up into this, we could possibly expect price to move down lower in the coming days. But, in terms of where the position or the opportunity was, today was a bullish move. So, yeah, pretty nice. You can see price came down, wicked into the inverse fair value gap. There's a bit of nerves around here, but I wanted to be a bit more stern on my plan, with this model. If it doesn't play out, then you just got it wrong. And due to the higher time frame confluences, I felt more confident that this was the right move. Sort of around this candle here, I was like, right, I feel like I'm correct here. And, in the moment, it was sort of hovering around 116, 120, 107, like that sort of range. And I just ended up closing because ultimately it was a fear of loss. So it wasn't the best execution, but the analysis was correct. So it's bittersweet, you know what I mean? Like I could have easily made 330 today, and made back my loss on the week, and we would have been up like 120 on the week. But nonetheless, we're only, what are we now? We're down like 80 or 70 on the week. Yeah, 77.40 on the week. So you can see it's looking a bit better than it was. That's the main thing. Yeah, ultimately, it's one of those. I could have executed better, and it seems to be a recurring theme with this strategy. I tend to close early out of fear of reversals like such. Especially since after we pushed up here, I moved my stop to break even at 9.51, which was this candle here. And yeah, like right at this high, I moved the stop to break even. So it was a risk-free trade. I could have just let it play out, but I wanted to secure some profits. So a couple learning points, but nonetheless, still nice analysis. And you know, we had similar moves on the futures market as well. Inverse fair value gap, maybe on the 15-minute. Right here, break a structure, and then 5-minute fair value gap there. 1, 2, 3 candles, push up, retrace, bang. Price, bodies of the candles all respect above the fair value gap here, and the continuation upwards. What I did notice was on the futures market, you know, on the Nasdaq, it played out on the S&P similar to US100. Didn't quite get there, and that would be the SMT playing out. You know, one has taken the previous daily high, whereas the other one hasn't, and you know, ultimately it was a bit of luck picking the right market today. So yeah, one of those. To be honest, this might be me done for the week. You know, we had a red start yesterday, but you know, I made sure to stick to my one trade max that I've now implemented, and that will be a strong rule that I'm implementing. One trade max in a day. If you lose it, just come back another time. Simple, 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 simple. Yeah, I think that's about it. I think on gold kind of wasn't as a massive push up today. Bit more bearish, bit of profit taking from people, you know. Nonetheless, we do still have this big 4-hour fair value gap that is probably just acting as a retracement before push higher. And yeah, so tomorrow I think we have unemployment claims. So we got unemployment claims, final GDP for 2025 Q4, core price index, and New Zealand CPI in the Asia recession. So yeah, there's that. And then Friday we're not trading because red folder Fridays I don't trade. Simple. And yeah, this will probably be me for the week. We'll obviously do the market recap tomorrow, but nonetheless, we do still have this down here, which could act as a further target if we do go bearish before finally either sweeping this low down here or reversing from this level. That's the same on the S&P, kind of similar, but yeah, one of those. This will eventually get taken on the S&P. It's just a matter of time. So one of the notes I did make was trust the previous daily low to previous daily high model, simply because it's a higher time frame model, it's higher probability when executed at the right time and with the right market context. And then the break and retest model is more for scalping. And yeah, you can hear my stomach is going. I'm absolutely starving at the moment, so we're going to go get some scran in a bit. And yeah, I think that's going to be me for today. I will catch you tomorrow. Trade smart, trade safe, and follow your plan.